Bill here with the Metals Minute. Today is Friday, October 28th, 2022. We have all the metals higher again this morning, and there's some interesting numbers coming out concerning the M2 money supply. When we look at a graph going all the way back to the year 2000, and we compare that to the price of gold. Normally, gold runs parallel and most often above the M2 money supply in terms of the price, where the price is compared to the quantity of money in the system. And there are very few times, relatively speaking, when it's underneath the M2 in terms of a ratio. And right now it's way below, and it's a very odd situation that indicates how much of a bargain physical gold is right now. So this is still we have a really unprecedented in terms of opportunity to own gold compared to the M2 money supply. It's typical, if you're familiar with investing, one of the metrics that are often used in terms of the Dow Jones average is the 200-day moving average. Normally, the Dow Jones doesn't spend a lot of time underneath the 200-day moving average, and whenever it dips below that, it's usually considered to be an opportune time to buy in. Because it will pay off in the months and years ahead. And this is a similar metric for gold. And so if I can, I'll show you a chart and how much underneath it is right now and what kind of an opportunity that exists for us at this moment. And part of the reason is the dollar. The strength of the dollar is one reason why we're able to do that, but also this ratio. Now there's some other interesting information concerning, and let me say this, by the way, even though gold is at a bargain right now, it still has outperformed all of our major stock indexes, the Dow Jones, the NASDAQ, the S&P 500, and also the 7 to 10 year Treasury bond market. Gold has outperformed bonds as well this year. So even though it's a relative bargain, it's still also been an outperformer for the year so far. So it's a good place to consider deploying some of that excess capital or even converting some other resources from that you may have in other types of assets. Be a good time to consider moving some into gold. Now let's talk about another aspect of the economy, and that is the interest expense. Sometimes people wonder who will cause the Fed to stop raising interest rates, or what will. Typically the Fed has been late often to their own parties. In other words, the goals that they set, they're often late to respond to because they look at lagging indicators sometimes, and they're often the last ones to admit what others, including this channel, have been saying for a few months. So it's feared, or it's a concern, that they may wait too long before they stop raising interest rates. Well, one thing that they have to consider that we don't often think about is the interest on the national debt. Now, the third quarter numbers have come in, and they're at about $756 billion per year at this moment. So far has been the interest expense to operate the government. So we're approaching $1 trillion in interest from year to year. Now keep in mind, this is a federal budget that's between $5 and $6 trillion. So that's a large amount, a large percentage of the budget that really doesn't service any ongoing or future needs. It's only paying for previous expenditures. And so when we think about how much the government spends for defense or for Social Security payments or Medicare or pensions and that kind of thing, the interest expense puts pressure on every other area of the budget. Think about your household budget. What if 1/6 of your budget went to interest on debt, and how much harder it made it to spend on every other category? So that's going to act as a drag on the Fed's ability to continue to raise interest rates. Someone will cry uncle in the government at some point, just due to that alone. And so that's one reason why I believe they're talking about wanting to have so many more IRS agents to help find revenue to plug this burgeoning expense of government, in large part due to the expanding interest rates payments. They've never been this high. We've never had this much of the budget dedicated to interest expense. So that may cause the pivot to come a little sooner than what the Fed may otherwise want to see. And in that regard, that's also positive, net positive for precious metals. Thank you for tuning in. There's a lot happening. We'll keep our eyes out open this weekend, and we believe you should too, and we'll keep you informed next week when we're back together. Thanks for tuning in. Have a great weekend. God bless.